You've probably heard that what ICT is one of the most profitable trading strategy out there, and without lying, it's actually a great strategy. There are so many profitable traders like Jade Capital, who has actually made millions of dollars from actually trading this so-called ICT strategy. But the problem is that what when you come on social media here looking for solutions on how you can actually learn this ICT method, is either you are seeing some gurus down to sell $1,000 course to you, or basically you watch some YouTube videos and end up getting lost along the way due to some complicated terms. Well, if you find yourself in this portal before, you don't have to worry anymore, because in this video I'm actually going to share with you every single thing you need to know in order to start trading ICT. And to make things easier for you, I'll be breaking this video into 4 major sections. Now, the reason I'm breaking it this way is so that what every single key point can be broken down to the various levels so that a total beginner can actually understand it. First of all, we are going to talk about the ICT market structure. And then next up, we are going to discuss other blocks. Now from there, move on to section 3. Section 3, we are going to talk about what fair value gaps. In the fourth section, we are going to combine all of them and make a basic ICT setup that every single trader can actually use and start trading with. So before we get down to business, let's give a shout out to our sponsors for today, which is Light Finance. Now, Light Finance is actually one of the most legitimate brokers out there that I have personally been using for the past few years. And if you've been watching my channel consistently, you know that what I always advise every single trader to use Light Finance. And the reason is simple. They have a copy trading feature that makes it easier for even unprofitable traders to actually generate profit off the market by copying other profitable traders. And apart from there, the minimum deposit is actually just $10, and they support a lot of trading options from currencies, commodities, cryptocurrency, shares, indices, and all others. And then they also have the fastest trade execution, and they have the lowest the lowest spread you will ever get in the market based on my experience so far. And they support MetaTrader 4, which is the OG that a lot of traders still like to today, MetaTrader 5, C-Trader, and also an in-platform trading, because their own trading dashboard looks way slick. I even use it over that of MetaTrader. So guys, with this said, let's get down to business. Now, talking of market structure, now market structure is basically the foundation of every trading strategy. Whether you want to trade ICT, smart money concepts, price action, knowing the market structure that actually back these strategies up is one of the best things you can actually do for yourself. So before we do any single thing, let's first talk about the section 1, which is actually the ICT market structure. So guys, now we are on my chart right now, and let's take a look at this together. Now, when you look at this market here, what you can actually see is simply an uptrend. And when we talk of market structure, we are talking about some of the most complicated terms out there, such as what your lower highs, your lower lows, your higher highs, your higher lows, and then your breakout structures, your change of characters, and all of that. Now, before I actually show you the real chart, let me first of all show you on an empty board. So now let me say you enter the market, and then you want to identify if the market is an upward trend or not. Now here is how you can actually do that in the ICT way. So for example, you came onto the chart and you see the market moving in this manner. Now when you see a market moving in this manner, it basically shows that what the market is an uptrend. However, just saying it's an uptrend doesn't really make any sense. You have to prove that what this is an uptrend and what actually makes it an uptrend. Now when you are trading the ICT system and you see a market like this, now the reason why you are going to consider this market an uptrend is basically because you can see that what the market is moving from the lower side straight up without actually breaking any of the lows and coming back. Now in ICT, we actually call this, you see this higher side here, let me mark them out with a test. Now this higher side here are known as the higher highs, so we often mark them as HH. Now the reason why these are called higher highs is simply because the next one is always higher than the previous one. Now let me just clone this. You can see clearly that what in front of it is another higher low, so forth and so on. So when it comes to ICT, how you get to identify if the market is an uptrend or a low trend is basically by identifying this. As long as you see higher highs keep going this way, that basically means that what you are treating an uptrend. And when you see higher lows this way as well, it means you are dealing with an uptrend. Anything other than this, you need to be more careful to make sure that what is actually an uptrend. Now let's also take a look at the opposite, which is downtrend. Now the difference between the uptrend and the downtrend is that the downtrend is actually moving downwards, whilst the uptrend is actually moving upwards. And what qualifies it here is simply, over here if you take a look, we can see that what we have what we call the lower highs. Now you see this place here are called the lower highs, and the reason is simple. The previous one, the next one is always lower than the previous ones, and this one is also called lower highs. So in an uptrend we have what we call the higher highs, but in a downtrend we have what we call the lower highs. Now on the other hand, the lower side here, instead of calling them higher lows and higher lows. Over here we call them what? Lower lows, which are often identified with LL. So let me just write it out as well. So uptrend creates higher highs and higher lows, downtrend creates lower highs and lower lows. Now in the process where this market is actually creating these higher highs, higher lows, lower highs and lower lows from uptrend to downtrend, it also creates two other important things that you need to know, which is known as what? The breakout structure and then the change of character. Now these two things also has their key important role to play. In fact, if you cannot identify a breakout structure and a change of character and differentiate them, then you can't really identify the real market trend. So how do you identify this in the market as well? Now let me give you a quick walkthrough. When you look at the market, see the point whereby the market is actually taking out the previous high. These areas are known as areas of break-off structure. Now the main difference between breakout structure and change of character is this. Now you see the moment whereby the market take out this high here, we call this as what? A break-off structure, which is known as BOS. Now it's often tagged as BOS, which is short form for break-off structure. Now over here, this is another break-off structure. So now let me show you, or let me just write it out myself. So every single point whereby the market take out the next high here is all known as break-off structure, until the point whereby the market actually takes out the previous swing point of the other direction. So for example, if you take a look at all of this market right now, here is the uptrend, and throughout this uptrend period you can see that the market keep taking out the higher highs, but then you get to this point whereby the market magically takes out what we call the higher low. You see this point whereby the market takes out what we call the higher low here, then we say the market has done what? Created a change of character. Now why is it called a change of character? It's called a change of character because at this point here, the market actually went from being an uptrend into a downtrend. So when you look at it, you see that the market went from being an uptrend into a downtrend, and that is the reason why it's called a change of character, which means that the initial character was an uptrend, and then the next character here is a downtrend. However, for you to be actually convinced and accept the fact that what, yes, this is a real change of character, we wait for what we call the following break-off structure. So after this change of character, for you to confirm that it's actually a downtrend, then you need to make sure that what you see this break-off structure. So the moment you get this break-off structure here, so the moment you get a change of character followed by a break-off structure, then you can come to the acceptance that what the market has created a new market direction. But then in a situation whereby the market only takes out this area here, created the change of character without actually taking out the low that created the change of character, then we can say that what the market still remains an uptrend. Until it takes it out, stay with the uptrend direction. But the moment you see a break of structure to the opposite direction, then a change of character has been created successfully. Now looking at the actual chart at this point here, let's zoom in. Okay, so take a look at the actual chart here. When you look at it here, you can clearly see that what we have an uptrend from this point here. Now before I talk of this, let me show you the downtrend that was created earlier to make it simpler for you. Now when you take a look at this market from this point here like this, you can clearly see that what the market is in a downtrend. You can see it was clearly in a downtrend consistently. When you're identifying it in the real market here, as I said, it looks a bit different. So this top here is your lower high. It's your lower high. This is another lower high. And then in terms of the lower low, here is your first lower low. And then here is your next. You can take here or you can take here. So for me, I like going with obvious position. So here is my next lower low. And then here is another lower high. So it's lower high. Sorry that I'm using W. Lower high. So you see here we have a downtrend, and this keeps going. Now if you want to sketch this out like the way we drew earlier, you have your beginning of the trend here. The market came here, traced back here, and then came down here, traced back a bit, and then came here, traced to this top, and then went straight down and then kept going. So if you take a look at this market right now here, if we are to mark it out, here we have a break of structure, as you can see, where the market took out this low here, created a break of structure. And then over here created another break of structure, as you can see from here, another break of structure. And this kept going. Now let's keep going until the downtrend actually switch into an uptrend. Now at the point whereby the downtrend switched into an uptrend, which is this area here, the point whereby the market took out this place here, the market took out this area here, we say that what the market has made a change of character. So change of character at this point. So at this point here, we have a change of character. Why? Because you can see that this was the last lower high that the market created, and you can see the market has come back to sweep it out. In this situation, here becomes our change of character. Now, in order for us to confirm this change of character, we need to see a few break of structure. And the market did not create any reasonable one here until it gets to this point here. Now you see that what in the real chart, it looks a bit different than when you draw it with your hand. That's why I'll have to show you the hand drawing first before you see the real chart. Now here you got your break of structure. So you can agree that what the market successfully switched from a downtrend into an uptrend. So from here you can identify another break of structure here, another break of structure here, and then until the market changed back to the downside again. Now talking of order block is basically the footprint of this big institution where these banks and the financial institution and these big guys, the billionaires, are actually taking their trade. Why? Because whenever they come into the market, they create a very impulsive movement that gives us a good room to look for good trading opportunity. So whenever I see this sort of impulsive move, then we look for order blocks around it. Now you are a bit confused, right? Well, let me show you what I actually mean in the market. Now take a look at here. Now you see that what we have a higher high here, and then in an uptrend, where your higher lows are located is where you actually see most of your order blocks. So in an uptrend, the last bearish candle that the market created before the market started shooting upward is your order block. So you see this point whereby the market created this higher low before shooting to the top side to create the higher high. Well, you're actually going to see your order block around here, and also the next one as well, you are going to see your order block around here. These are the areas where you look for your order blocks in an uptrend. Now in a downtrend, you look for your order blocks around where the lower highs are created, because these are the areas whereby the market is actually pushing down from. So the market looks for this area because this is where the big guys came in earlier, where they made an impulsive move from, which means that whenever the market come here, there are so many others waiting to push it back down again. In that situation, this actually makes it a decent order block. Now let's take a look at the real chart. Now taking a look at this market right now, here is an order block. Take a look at this area here. You can see that the market came down here, and then suddenly there was a high impulsive move away at this point. Now this point whereby the market made this impulsive move, this is where your order block actually sits, and your order block here is this last bearish candle here before the bullish candle. So on my chart, the black candles are the bearish candle, and then the blue candles are the bullish candles. So you can see that this is your order block. Now whenever the market comes back to this level, there is a high probability that the market is going to continue buying from it. Now other than this, another order block here is basically this point. So this point is another order block. Why? Because the market made an impulsive move away from it. So here is another order block. You can see the market came into a plate, and then eventually bought upward. So this is another order block. Now order blocks, at times they are small, at times they are big. Like in this situation right now, you can see that the bearish candle size, I actually, based on how I identify my order block, I use the entire bearish candle, including the lower wick. So that is the same thing I did here. I always involve the lower wick. So when the market comes here, you wait for a bounce outside before you actually take the trade. However, before you validate any order block, make sure that it has either a change of character or a break of structure in front of it. Like for example, this one has a change of character right here, and then this one has a break of structure on it here, and then it still went ahead to create another break of structure again, which means that around here, if this market can have a high impulsive move from here, we could be looking for another order block around here. So you see, whenever you agree to mark any level as your area of break of structure, your area of order block, make sure that there is a very decisive move, not some slow movement. Now talking of fair value gaps are imbalances that the market actually creates that it hasn't filled yet. Now what I mean by this imbalance is basically whereby the market moves with so much force that it keeps a lot of space behind and leaves a lot of volumes behind that it will later come back and take, even if it doesn't do it right now. Now I know this explanation is somehow confusing, so let me show you on the real chart what a fair value gap actually looks like. Now a fair value gap is basically, take a look at this movement here. Now fair value gaps are always formed in during the movement of 3 candles. So you need at least a minimum of 3 candles in a single direction to actually determine a fair value gap. So here now take a look at this blue candle here, this very one here. Let me close this off. This very blue candle here, this and this. Now in between these ones here, you see this gap here is known as a fair value gap between this wick and then, so now let me mark it out so you can see between this wick and this wick here is a fair value gap. Now this area here is a fair value gap that the market will always come back and retake. As you can see here, the market came back, retook it before it went back upward a bit before finally crashing down. And then another one here is simply this, another fair value gap. Now fair value gaps, you are actually going to identify a lot of them in the market when the market move with this momentum. Now that's where the point whereby we talk about a valid fair value gap actually come in. Now not every single fair value gap you actually need to trade from. You only need to trade on fair value gaps that actually qualifies, and most of the time I only look at fair value gaps that are close to key levels such as other blocks. Now fair value gaps that are close to other blocks are much more stronger and they have higher probability of actually working out than any other form of fair value gap. Now we go down to the final section, which is where we actually do an entry ICT setup. Now in this setup, we are going to identify what the market structure, we are going to identify the order block, we are going to identify a change of character, a break of structure, and we'll also look at for fair value gap, because when you have a fair value gap and then an order block that actually overlaps, it gives you one of the best entry systems ever. So now let's get down on the chart. Let me also walk you through that. Now we've used this particular GBP USD market a lot, so now let's port over to gold. Now gold is where we're actually going to do the setup. So now let me come down to the 4-hour time frame. Now let's take a look at this market right now on gold. Now we can see that what the market used to be a downtrend and then it started ranging, and at this point here the market gave us what to call the change of character. So here we had a change of character. Now I'll look behind this change of character. Apparently the market did not give us what we call an order block, so we didn't really get any order block here. Based on my system of identifying order block, there's no order block here. Therefore I look forward to the next key level, which is where the market created the next break of structure, and obviously this is where the market actually created the break of structure. Now hereby the market created the break of structure. Now let me also mark it out with BOS. So here the market gave us a break of structure. Now I'll look at this area here. We could clearly see that what there is an order block sitting right here. You can see this last bearish candle before the bullish move, it's an order block that is sitting right here. So therefore we have an order block right here. Now after identifying an order block, we need to look at for what we call the fair value gap. Now in order for us to spot the fair value gap, now here is it. We have this candle here. Now this is the order block. Now we have this candle 1, and then candle 2 and candle 3. And then we can even take it from this bearish candle here, 1, 2 and 3. So therefore we also have what we call an order block right here, a fair value gap right here. Now here is a fair value gap that the market will always come back to fill. Now there are some people whereby they might not consider this fair value gap. Now if you are trading those their systems, then here is the fair value gap that you look into. So in this sort of situation, this order block here will be one of the most powerful order block in this trend due to the fact that it has a fair value gap sitting right in front of it. Now in some situations, the market might not actually come back to the order block. However, once you see it respect the fair value gap, then you look for an order block within the fair value gap to take your trade from. So here is a basic and simple ICT setup. So all you need to do from here is simply wait for the market to actually trade down, get into this fair value gap, and then finally drop down to your level here. Now another thing I will actually advise is simply when the market comes on a higher time frame like this, I usually don't advise you take a trade immediately. Always go down. So since we're on the 4-hour time frame, you can go down to the 1 hour or even 30-minute time frame to look out for your actual entry. So once the market come back here, you look out for a lower time frame change of character, and then you actually get your trade from that level. So guys, this is the thing I personally advise. Now if you want me to do a detailed video about the ICT entry system whereby we'll do a full backtesting section, then let me know that in the comment section, and we'll actually do a full live backtesting section with this particular strategy that I just broke down to you. However, this is every single knowledge that you actually need to trade ICT. We talked about market structure, break of structure, order block, which is order block, fair value gaps, and also give you a basic setup that you can actually look into to trade. Now, trading doesn't have to be complicated. You just need something basic that actually works, and then you stick to it. So don't make trading complicated for yourself. Just look for something that works and actually stick to it. So guys, this is all I have for you in this video, and don't forget to trade with Light Finance and also Blueberry Funded. Link to both will be down in this video description. Hope to see you in my next video. Bye.